What's up, folks? This is Crypto with James talking to you today about MIR Protocol. MIR Protocol is is built upon Terra, and the whole idea is that you can effectively mint utilizing MIR synthetic tokens, and to be fair, you can also farm synthetic tokens. This is providing real world the on-chain potential to real-world assets. I like this. So I'm going to get into everything with MIR. Before I do, as always, I update the spreadsheet. These are the first 26 coins I spoke about on the channel that I thought would smash it in this cycle. Had you invested $100 into each one when I released the videos and you were still holding those bags, you'd be in profit for 67 grand. I've held them all, but my portfolio is very different now. If you want to see what I'm holding, you can check out Copy My Crypto. In the last 6 weeks, we've had one airdrop that airdropped thousands of dollars to people. One airdrop that airdropped hundreds of dollars to people. One investment that 8x within about 6 weeks. Currently, right now, there's a crypto that has a huge airdrop on its way. And everyone in the members area knows about that as well. That's going to be very profitable. If you want to be a part of that, then you can check it out. One thing I reiterate as throughout the cycle at the moment, bank profits along the way, but stay in the market when the market's down. It's the best opportunity you're going to have to pick up great investments at real discounted prices. This is a really great opportunity. I found Phantom in the bear cycle. That's up 455 times in value. And I've got a list of cryptos that I think are 5 to 10 year projects that should be absolute beasts. So how they retrace, how they develop, who they onboard is all the things I'm going to be watching during the bear circle, and when I think they can 40, 50, 100, 200x, I'm going to be letting people know. So if you want to know what they are, you can check out Copy My Crypto. Right, MIR Protocol. So MIR Protocol is where synthetic assets are built by Terraform Labs on obviously the Terra blockchain. MIR Protocol is totally decentralized, and the MIR Protocol, as in MIR, that's the governance token. Now, Terraform Labs has no intention of keeping or selling MIR tokens, and there are no admin keys or special access privileges granted. That's always nice to hear. The intent for this is a completely decentralized, community-driven project. The governance of it is always participated in well. In terms of the votes, the mirrored assets are blockchain tokens that behave like mirror versions of the real world assets. So whether it's MIR, Tesla, MIR, Amazon, and they give traders the price exposure to the real assets while enabling fractional ownership, open access, and censorship resistance as any other crypto. Unlike traditional tokens, which serve to represent a real underlying asset, M assets are purely synthetic and only capture the price movement of the corresponding asset. So just because you own M Tesla doesn't mean you own part of Tesla, right? But what it means is, you can own half of a Tesla, or you can own half of a synthetic Tesla, right? As opposed to the only way you can get Tesla is if you own you buy a full share or whatever. Now, the difference here is obviously and one thing I like about this, and one thing I've spoken about with regard in the past about the tokenization of stocks, which is an inevitability, is the fact that we're going to end up seeing this on a much wider scale because it removes a middleman. That is one of the biggest pains in the neck for everyone, is that we see within real life investments, whether it's on whether it's on stocks and shares or whatever, you have to deal with 17 or 18 or 19 million middlemen, and you've got to pay your fees as well for participating in participating in the stock market. This is one of those where you don't have to. And it's quite nice because obviously it gives people an opportunity to participate. Now, yeah, you don't necessarily own part of the company, but if you are someone that is a trader, or you are someone that is very knowledgeable about the stock market, this gives you a massive advantage, because all of a sudden you're taking out all the fees for the middlemen and simply participating in buying or selling the tokenized versions of the stock. And MIR is very, very good with this. Now, there's a few others. Obviously, FTX is knocking about, but MIR is completely decentralized, which is obviously a big plus. When you check out MIR as well, you know, they've got trading, so you can obviously trade with MIR. You can get yourself your tokenized stocks, whether it's Amazon, Tesla, whatever, Twitter. And you can see, like I said, because it's based on Oracle data as well, you know what the price, the Oracle price is compared to the Terra price. There is also an opportunity where you can borrow, as long as you've got 150% collateral, you can borrow, you know, a certain amount of whatever mirrored token that you want. And what that does then is you can utilize that to farm. So it's like a double down process sort of thing. If you've got 150% collateral, say you get yourself one Amazon token, you can then use that and farm for Amazon, right? So Amazon gets you 26.13% on the long farming. But there's also the opportunity to mint as well. So you don't just have to borrow, you can mint. And again, nice opportunity to start building up a ton of synthetic assets. And again, pulling that back in and starting to utilize it as a farm mechanism gives you the opportunity to gain on the thing you're borrowing. Now, as long as obviously the market doesn't tank and your collateral has to get used up, it's a really nice opportunity to build positions via the borrowing and then via the farming. Obviously, they've got the governance mechanism. I've spoken about that as well. You know, so they create their polls, and like the most recent one was increasing quorum percentage to decrease the governance spam. So 10% quorum has already been met since V2. There is zero risk to posting crazy polls. 18% quorum means poll fee could be lost instead of refunded, restoring the need to reach soft consensus before posting governance spam. Because obviously, because it's a totally a properly community-led project, you get the occasional spam BS. So they've like started effectively introducing some level of punishment to ensure that that happens. And stuff like this. Freeze some community pool in case of scam. Vote no on poll 185. It is a scam. You know, they put out stuff like this. Poll 185 is a scam. So, you know, what you can see is obviously that there are issues within the community, but the community, to be fair, literally address them immediately. If they see something that is dodgy, they alert everyone so no one gets deceived. I like that. That's a strong community right there. You know, you're always going to have a dodgy small percentage within every community. That's true of every community worldwide. And they seem to be on the ball all the time about this. Generally, I'm really fond of this. Like I said, with derivatives is a really undervalued, synthetics, sorry, is a really undervalued area of crypto. We see a lot in FTX, but beyond that, as FTX is so bloody centralized, having MIR protocol completely decentralized, utilizing an Oracle to track the actual data, I like this. Now, when we actually look at MIR protocol, so MIR protocol is that's mirrored Tesla. So MIR protocol is knocking at around $2, was it? $2.66. So there's a market cap of 200 million, right? But its total value locked is $1 billion already. So it's 5x on the total value locked compared to the market cap. There's about a fifth of the overall total supply actually circulating. So obviously there's a lot of room that this can go. But it's going to take time for all of them to be distributed. So far this year, biggest run that we saw was $12. So if you think about it like that, you know, we're looking at effectively a 4x, a little over a 4x to get back to its high, which is pretty good. I would expect that we would probably see that. Although, mind you, there are, yeah, to be fair, we're looking at a 5x. 5x would put it at about $1 billion. $1 billion of $4 billion, 0.40 million, right? For a 5x, and that seems achievable. Bear in mind, MIR protocol is already integrated with so many things as well. It's integrated with Cosmos ecosystem, Terra ecosystem, obviously. It's part of Pantera and Arrington Capital's portfolio. There's a lot to like here. A lot to like. Now, in terms of what they've got to come, one thing that we're going to see more of as well is liquidity pool tokens. This is something that I've spoken about in the past, particularly with regards to within their white paper. So staking liquidity pool tokens and is an opportunity for you to obviously accrue more of your mirrored tokens. Obviously, you've got to participate in the ecosystem to do that. So you connect your wallet and go through the ecosystem. For me, I think one of the best opportunities, as long as, and it's risky, so I will point that out, but if you are able to provide 150% collateral, then you've got an opportunity to borrow, and then you can utilize what you're borrowing to farm. And then, as long as the market doesn't, as long as the stock market doesn't tank, you've got an opportunity to earn from what you borrow, which is pretty cool. And again, you know, it's a nice way. Odd. It's a nice way to begin accruing additional money. For me, MIR, like I said, I think this is one where it probably will be less susceptible to a bear cycle than a lot of the cryptos out there, because it's immediately integrated with the synthetic tokenized stocks, and tokenized stocks I think are going to consistently be traded, because even when there's a bear cycle in crypto, the stock market will still be going on. People will still be trading, and people will still want to be trading stocks. And if they have realized that it's better to trade stocks via synthetic assets, so you cut out the middleman and all the fees for the middlemen, you've got an opportunity to continue. I think this is one of those that's completely less susceptible to those bear cycles. And there's a lot of cryptos that are not, and a lot of cryptos that might struggle in the bear, and will struggle in the bear cycle. Most will. The question is, like, you know, gaming might not. Gaming and NFTs are a really interesting one. And to be fair, synthetic assets, synthetic stocks will not be impacted necessarily by a crypto bear cycle. So will the protocols that they're built upon be affected? Probably less so. It's an interesting one. I like this. Anyway, yeah, that just give my 2 cents. That's it from me. I hope you're all keeping well. If you're new to crypto, come check out Copy My Crypto. It's where I share my portfolio. Like I said, there's a massive airdrop coming that I've made sure the members are aware of. I think that's going to be worth a lot of crypto, a lot of money for people. So it's an opportunity everyone wants to get on board. There's only a few days left. So if you want to check it out and see what it is, I recommend you get on Copy My Crypto. Anyway, that's it from me. Take care. Bye-bye.